We're back on Morning Trade Live. Let's focus on General Motors. The stock hit a new three-year high today after strong earnings and raising full-year guidance as well. The company is reassessing its EV manufacturing capacity due to a lack of demand and expects to lower its losses in that division in 2026. GM also lowering its expectations for tariff impacts for the fiscal year by $500 million. Let's take a look at some of the other stocks in this space and some of the other names that are moving today. So General Motors is flying up 14% right now. Ford is tracking higher to the tune of almost 3.5%. But Tesla, ahead of its key earnings after tomorrow, is on the back foot there, down 0.5% in the session. GM is the focus of the morning trade. So joining us now for a closer look is Schwab Network host Marley Kayden. Very good morning to you, Marley. So what were the biggest sort of takeaways from GM's third quarter report? Because, I mean, the numbers look good, the guidance looked good, but it was interesting as far as sort of mixed commentary around tariffs and EV demand, but it's been a positive catalyst for the stock today.
Yeah, certainly a positive catalyst, and good morning to you, Sam. Yeah, the tariff conversation much better than expected. The EV conversation, as you just highlighted there briefly, a bit of a sticky issue for them, but overall the report really strong. Like you said, they beat expectations, they lowered their tariff costs, they also raised their guidance. So first I'll walk you through some of the numbers. EPS came in at $2.80. That was better than the $2.31 that was expected. Revenue came in at $48.59 billion, better than the $45 billion expected, and was only down less than 1% year over year. Now that was supposed to be much lower. They were expecting a bigger decline year over year, and they didn't get it. So that was a positive for them. Adjusted EBIT came in at $3.38 billion, expectations for $2.72. So a very significant beat there. This outlook story is really one of the big drivers, I think, behind this huge move to the upside, though, really signaling strength heading into the fourth quarter. It beat expectations very easily. Updated guidance includes adjusted earnings, their EBIT number between $12 and $13 billion. That's up from 10 to 12.5 billion. So a pretty considerable uptick there. Also, adjusted automotive free cash flow is $10 to $11 billion now. That was supposed to be 7.5 to 10 billion. So another rating to the upside there, far better than the street's expectations. And then there's this tariff impact. This was another big part of the story. They reduced the expected impact of tariffs to between $3.5 and $4.5 billion, down from 4 to 5, also saying that they expect to offset about 35% of that impact. So the tariff conversation was one that was absolutely brought up anytime we were talking to people about these earnings and what we might be looking for in the call and what investors might be asking and what the analyst questions might be. The tariff impact was one of those primary questions. And for them to have it be positive and less impactful than planned with a 35% offset of the impact is a pretty great number. Now, I do want to make an important note, though, about the EVs. Their results do not include a $1.6 billion special charge that the automaker disclosed last week that's tied to that pullback in electric vehicles. So electric vehicles are going to be a bit of an issue. They're saying only about 40% of the company's EVs were profitable on a production basis, and made notes that they are going to expect profitability to take longer than previously expected because of the end of these EV tax credits and the changing dynamics and slowdown in adoption. So EV a potential sticking point for them, but I think overall a really strong report driven by the guidance and the lower than expected tariff impact.
Yeah, so the tariff impact, no doubt offsetting some of the EV adjustments, but it's not surprising. I mean, we have heard other car makers also talking about sort of reducing what they're doing on the EV front as well because of that demand story. You know, cars way out of my price range like Ferrari and Aston Martin, etc. But yeah, I suppose the market has got quite used to that. But thank you so much for that, Marley Kayden. I'll check in with you a little bit later. We'll trade it now with Tim Biggam, who's the options strategist at Pilot AI. How are you approaching your example trade for GM today, Tim? Good morning.
Sam, and really this was a report that really was outstanding across the board. Top and bottom line, not only beats, big beats, guidance raised outstandingly well. The only negative, as you were talking with Molly, was, kind of the EV story, but I think that's affecting almost every automaker here going forward. But I think for the short term, the floor is probably in General Motors, given the earnings we saw and the guidance. So I'm not going to be rushing to be a buyer up here, given the stock just broke out to past that 2021 high at around 65. But I would be be buyers certainly on any meaningful dip here. So I like selling out of the money put spreads going forward on GM, simply given that the stock was always cheap after the earnings is even cheaper here, even after the rally. So I just like to position to be a buyer on a dip, get paid to be waiting for that pullback here. I think the market may have a pullback, which will bring down GM as well. So I'm just selling the November 57.5 50 put spread earlier today, trading about 40 cents. So like that return on risk, have plenty of downside cushion. So cautiously bullish, I guess, is my viewpoint on GM here.
Okay, and it's interesting, obviously, while GM is up almost 15% today, I mean, Tesla is lower by about 0.6 ahead of its key earnings report out tomorrow. So that's a certainly interesting takeaway. What are your overall thoughts on the market action today, Tim?
Yeah, the action today, certainly we're seeing some of the risk off and some of the hottest names previously, gold getting walloped today finally. So we'll see what happens. I think next week will actually be the key for the market. We get some earnings this week. We got, Netflix, Tesla, as you talked about, with earnings come out over the next couple of days. But next week we have the Fed meeting and two of the biggest stocks, Apple and Microsoft, reporting. And interesting that, the Mag 6, the Mag 7, the Mag 5 is really the Mag 3 now, with NVIDIA, Apple, which is now the second biggest market cap stock in the indices, and Microsoft really comprising such a huge outweight here. So I think as those three stocks go, simply because of their weighting, so goes the market. So next week we'll tell the story. How do, kind of earnings look going forward is the key, given those valuations these stocks are trading at currently.
Great stuff. Tim Biggam, thank you so much. I always appreciate your insights. That is Tim, options strategist at Pilot AI, joining me there.